Hi traders, welcome to the coaching session as promised in the VIP members room and my Telegram friends. Just had a lovely swim in my pool and now I'm ready to have a look at the markets. The markets are absolutely dead, so I might as well do some coaching sessions and help you along to make you even more successful. For some reason it seems more popular to buy the signals than it does to have the charts. It doesn't make any sense to me. It's 500 quid for the price action charts and £600 a year for the signals. I don't know what's going on. You tell me. Anyway, I'm going to go through a couple of things and talk about convergence. There's been a few questions on convergence and also price action charts on Forex, but this one is gold. We love gold, just makes a lot of money. And as you can see, we had a big move south yesterday. There were some speeches going on, I think. There was no major news, but nonetheless it did fall. And we lost 40 pips. Big deal. I just want to go a couple of things. Now, this indicator you can use. It's up to you. This is one of those things that you can use. This is called a Hull MA by Mohammed, and you can add it to your chart right now if you want to. A little bit of a freebie there. And I've got my plots as green and red and set at 50. Don't do any other numbers, they just won't work. So actually, shall I go over to the light side? It might be easier to see. Not sure if that's easier. Anyway, let's change that to black or blue. Okay. Right, so we saw the move yesterday and we can predict quite accurately the support areas and the resistance areas. I've done a Fibonacci retracement from the top of yesterday, the high of yesterday, down to the bottom of yesterday. And the 618% retracement is sitting on 2379.5. Okay, that's the first thing to recognize. For those of you who don't know how to do that, let me just get rid of this and I'll do it again. So just go to your Fibonacci retracement on the left tool, left click on the highest of the high for yesterday and to the bottom of the high, bottom of that bottom area. And you can predict quite accurately that the 618%, you can't see that very easily, 2379.89 to be precise. Okay, so that's quite an interesting area of resistance. You can draw a line there if you want. So the markets are dead, so that's why I'm here. I've done my swim for the day, 20 lengths, that's enough for me. Getting on a bit these days. And so we can predict quite accurately that if the price is going to continue with that move south, then of course this is going to be major resistance. That's the first thing. The other thing to do is to see this line here. There's a support area here at a resistance area here at 23. If I can get it on my thing, 2378.95, 2380 basically is resistance as well. All right, so that's one way to deal with price action, and it happens on every chart. You can do that with every chart where there's a big move. So the other thing to note on the price action chart is this trend line here. This trend channel is now showing sells. And a couple of other things to note is we have a liquidity zone here, this yellow zone, liquidity zone here, which is the sell area, and we have a demand area here, which is in blue. Okay, so we're only looking for sells in a downtrend, and we're only looking for buys in an uptrend. That's how it works. And one thing to note here in terms of this Hull thingy is that, have a look here, when the price moves down below it and it turns red, you can use that information to actually sell off gold or anything else. And when it goes green, and the important thing is that the candlestick is green, and the candlestick is green and above the green line. Okay, now for me, my interpretation is that whenever the price moves up above this line, it's a buy, and whenever the price moves below the line, it's a sell. Sometimes the color change takes a little while to change, and I don't like lagging indicators. I prefer to see something leading, although it is useful. This, for instance, was overnight, 1:30 in the morning UK time, and of course not going to be there, but nonetheless you can see that the price is moving above this area. Now, convergence is an important factor when it comes to price action, because, and if you're not using price action, guys, it's different with the parabolic trends, because you're holding on to long-term positions. If you're following those on the FMA, they are the long-term positions. We're up God knows how many pips on gold, 3,000 and something, I don't know. But that is where you just move your stop each day with the FMA, the video on demand, and that's it. 10 minutes a day, that's all it takes. When you're going to get a big move, several thousand pips, you're going to bank it and make money while you sleep. Now back to convergence. I digress a little bit. So we can see that the price here at the moment live at what is it, 10:45ish. We can see that the price is just mulling along. It's not actually doing anything today, but this is the convergence area here. Can you see that? So when the price gets to this point here at about maybe 3 o'clock, it's likely to react at that point rather than where it is at the moment. So convergence simply means there's a number of factors happening with that price which could drive the price up or down. Let's have another look at an area. So we can see from here, now I want to go into this in a little bit more detail. Now this is particularly useful if you have the price action charts. If you don't have them, then obviously you won't know what the hell I'm talking about probably. But yeah, I think it's always useful to see how it works. So this is a convergence area. Why is it a convergence area? You can probably see by the color. Let's take that off, not to confuse you with anything else. Let's take the fibs off. There's one factor which is important. It's hitting a very important liquidity zone. So the blue areas are buy areas. These are areas where the big dogs have all the money lining up to take out the stops. Simple as that. And we know where the orders are placed. Okay, so there's lots of orders placed up here at 24.00. There's lots of orders here placed at 23.65. We know that. There's some small orders here at 23.80 getting to sell, and we are simply getting on the back of those institutions. Our money won't change anything, but obviously the big dogs across the world could change the direction quite easily, and the liquidity grab is filled. So hopefully that's helpful in terms of helping you to confirm where the trends are. The other thing to note here, we have an outside bar. So once the price comes outside of this channel, then we can say that that price has gone too far too quickly. I'm going to show you some fantastic examples of this in the following. That's what I'm looking for. I'm going to give you some areas here, for instance. We've got lots of time. You can spot them yourself quite easily. Outside bars are really, really powerful reversal points or correction points. We don't know at the time, of course. We can predict, but they are really important reversal points and convergence areas. Okay, so once you see an outside bar, we don't have one live now, but there was one live yesterday or last night, overnight, then reversed up. Let's see, so this one here was a nice one. So this is convergence area. Why is it convergence area? Because it's got an outside bar, plus you've got liquidity zone as well. Outside bar, liquidity area as well. So you've got convergence happening throughout. All right. So hopefully that's helpful for gold. Nothing's going on in gold. It's sticking to that fib retracement, and our stop is somewhere up there. But now let's look at the long-term charts using price action for Forex and everything else. Now, of course, in order to see the convergence areas, you would need to see price action. You need to see volume in the market. That goes without saying pretty much, doesn't it? We're not seeing any volume in the market this week pretty much for Forex. But this was a signal sent out into the Forex signal group. If you're not in that, then fine. If you want to upgrade to that, fine. Up to you. I'm not bothered. I make no money in the markets. It's up to you what you want to do. I'm flexible. So can you see the convergence? So the yellow area, as previously explained, is high liquidity for a sell. The blue areas are high liquidity for a buy. So you could have bought against the trend, of course, down here. Don't recommend it because that could be taken out just as easy. However, what I do think is we have at least 3 areas of convergence. So the first one I will explain is the trend line, the trend channel is going down. That's the number 1. The price has an outside bar outside the channel. 2, and that's it really. That's enough. That's more than enough to be going on with. So, and there's probably other things that we can at the time analyze and get into. However, once the price has moved outside the bar, outside the channel, then of course you can go short immediately. All right, you can see the top of this range here, 21214. Just make your stop above it. Don't worry about it. You can go to the lower time frame. You can go to the 15-minute if you want. Up to you. But these are fantastic opportunities to look out for. So number 1, look for an outside bar above the channel. If you have the price action charts, if you have the gold software, then you know exactly what I'm talking about. If it comes out there, you are looking for reversal. You could wait for the candle to go red if you want to. Up to you. And then you're looking for 2-to-1 risk to reward. The other opportunity you can do, of course, is go to the bottom of the demand area. Sorry, the top of the demand area here at 209.02. Or you can go to the bottom of this channel. So it's totally up to you. But if you get 2-to-1 somewhere around there, if you get 2-to-1, I've actually got my target down here. If you get 2-to-1, I mean that's 200 pips there. Nothing to be sniffed at. Let's have a look around just for a bit of fun. I've got nothing else to do today, so what the hell. So that's pound New Zealand. Let's have a look at pound Aussie. Yeah, so there's one there. So we have, get my ugly mug out of the way. we have an outside bar, reversal. There we have a downtrend. This is a 4-hour chart, by the way. Downtrend there, and so you can predict quite accurately the price is going to go down. This is a nice support area, which is the median line. So you could have easily, if you didn't get this signal, then you could have easily got in much sooner. I'm not on my charts all day, so if you have the charts, if you want to get into this 50 pip stop, there's your 100 pips. You've had it already. There's your 100 pips, 2 to 1. You can take it down to the bottom of this median line, which is 170 pips. My target is down here, 211 pips. And what will happen is, as soon as the target gets hit, you'll get the message. And you think, shit, I wish I'd done that. Here's another one. Fantastic. Not quite outside. Oh, there it is. Right, okay. So this one here is the, what is this? Canadian Swiss. And you can see the outside bar. Outside bar here. Trend line. So outside the channel. Comes back into the channel. You could sell it there. With a 2 to 1, you've easily made that 200 pips easily. Let's have a look around. I don't know. We're long Swiss yen this morning, making money. Happy days. Actually, let me do that one now. Actually, we are here. So if you've got the signal, congratulations. In an uptrend, ignore the supply areas, please. Ignore these. You can use these as targets happily, but you can ignore these. Once we get all the price hitting these areas into demand area, into the uptrend, then you have this going on. I think our target's up here somewhere. So let's have a look around, see if there's any opportunity. It's unlikely because there's low volume, but we're bored anyway, aren't we? So let's go. So, oh, can you see one there? Outside the channel, into liquidity, boom. And this is a good example of what you didn't want to do. You don't want to be buying it here because it's not into liquidity. The demand is down here. Okay, there's a good one. A few hundred pips. Let's go into the yen. No outside bars there. But we're long that for the long term. Anyway, US Swiss. Again, not much to write home about. Let's have a look down here. Aussie Canadian. Oh, right, yeah, I posted this into the VIP room. There's a pending order. And the price is not got an outside bar. We've got an outside. We've got an outside. We've got an outside bar here, but not an outside channel. Let's flick through. So the convergence is outside bar, but on liquidity. So that doesn't qualify. Pound Canadian. New Zealand Swiss. Flat as a pancake. On liquidity, outside bar, but look at the trend line. Flat as a pancake. Aussie Swiss, no trend line to talk about there. Pound Swiss, I'll look at the pound yen in a minute. Probably selling off. Yeah, drifting. So actually, there was one there, wasn't it? See that there? See the trend line? So the price is outside bar. I did put this into the VIP room, as you can see, for this trading outlook, if you like. So that's what you're looking for, the price action coming into liquidity outside the channel in an uptrend. Then that's probably 200 pips there as well. So a fantastic way to trade. Let's look at the euro dollar just for a bit of fun. Probably doing nothing. Oh, right. Okay. So there is going to be a chance to sell off in the next few days, probably. Have a wonderful day. Hopefully you found that useful. Any questions, come back to me.